this is happy Diwali to you, of course, first of all. This has not been a good Diwali for the bulls, and you get a sense that it's getting a bit nasty now.
No, I think, one has to be realistic as to what the market was and put expectations around it. To expect a bull rally to continue in the scenario that India is particularly in, I think, was expecting too much. Yesterday, we saw a big amount of buying from the DIs, which was kind of expected with the government trying to support, and which gave way today. So, the market construct, the political construct is not very happy. And finally, the fundamentals are not catching up with the stock market. We were getting so enamored by the GDP numbers, but the reality of what's happening on the ground is catching up. The second aspect is, no matter the government says things like oil pricing, you saw the price rise was kept in abeyance through the Bihar elections. Now it should come to the fore with the rupee devaluation. So you have a price rise coming in oil. You have interest rates now, yields are back to where they were before the rate cut. You got the farm sector, which we spoke about on Sunday, collapsing on its own weight. So, a hell of a lot of negatives all coming together. And I don't think government has a policy. Government is still talking about saying, I have huge indirect taxes, telling me there is growth. Little admitting that huge indirect taxes mean you're taking serious amount of money away from the people to spend. So, it's a wrong strategy at the wrong time in the wrong place. The results were inevitable. The market just caught up with it. That's all.
Oh, yes. Well, those are all the despondent cues put together. Ajay, hi, afternoon, and happy Diwali to you.
Thank you so much.
Diwali is, an auspicious and a very emotional time for the stock market investors. So a lot of people putting in money on Muhurat session tomorrow. But what would your advice be to the retail investor now? Is the preservation of capital the best strategy?
See, I tell you, personally, we were running short positions. We continue to run short positions. So we say even short position is a good thing for Diwali, right? So it's not necessarily have to be long on Diwali, correct? Okay, because there is some, we people like us find very small spots of profit in the whole year because there's too many optimists in the market. Having said that, I think for the retail public, and that's I think important, the problem with the retail public is gone taken in by the huge media event called Great India Revival. And I think you must be honest to the fact that negative news doesn't come on the television channel at all. So all the people are hearing is, equity is the greatest place to be, the only place to be, and so on. And I think retail public has got, to my mind, as an independent person, quite misguided in expecting returns out of this market. And advice is simple. What we gave on Sunday is focus on gilt, focus on debt, keep out of the equity market for some time till things stabilize, till the Fed takes a decision, till the government policy changes. Otherwise, you're not going to see equity returns. You can see trading returns, but not the investors are not going to make money in this market. So advice is stay clear. This is not a buying opportunity. If you have got a rally, you sell out and stay quiet for some time on the sidelines. Being adventurous perhaps will not pay you. Maybe it'll pay in some stocks. Having said that, the only caveat is there are still some stocks which make sense to the people. If you see Maruti doesn't collapse so much, you see the liquor twins, they don't collapse so much. So there are pockets of stock which don't collapse as much as the market, and this could be the best brother to be with.
But Ajay, at the end of the day, do you get a feeling that this is still a bull market, or do we need to change that hypothesis itself? Because look, I mean, it's a correction which started in January. I think for the Bank Nifty, it started in January. For the Nifty from March, and we are now almost at year end, and it's lasted longer than normal bull market corrections would last.
See, I think it's still a bull market, and the reason I say, Anuj, it's a bull market is because still the stocks are valued at a fairly high levels of PE multiples, by and large, compared to the real fundamental and the economic story. If you compare yourself, Johnson & Johnson US, it still gives a dividend yield of 3.5%, is quoting on a PE of 14 or 15. If you look at Indian stocks, everything is a decent stock is at a PE of 25 to 30, which tells you we are still in the bull market by and large, because the valuation expectation and parameters reflect a growth of stock market returns of 25% plus by and large in the portfolios. So I would still say that qualifies to be a bull market, maybe misguided, but it is a bull market.
Okay, I heard you say that no bad news is covered on the media. I beg to disagree. We cover all the news, whether it's good or bad. We say it as it is, right, Anuj?
Media is the favorite punching bag, Sonia. It's, if nothing works, shoot the messenger. So, but we have become used to that.
Yeah.
We get good feedback also. To be fair, from people like
In fact, if
Ajay.
there's anyone who calls a spade, it's media, right? I mean,
Yes,
nobody
no,
else,
but
especially business news
yeah,
channels.
but of course, Ajay has been kind to us as well, so he has the right to criticize us for, if he believes that media is not doing its job. But having said that, Ajay, is there a quick fix? Is there something that the government can do? Because that's a lot of that's a query which I get a lot of time. Is there something that this government can do to at least have a bit of a quick fix and move on from here?
Yes, I think government can do a lot of things. And I think the first thing government needs to do is to junk this GDP number called growth and stop quoting it all over the place. If you don't admit there is a problem, you can't find a solution to it. So I think first stage is, let's assume you junk this totally and say, okay, forget 7.5%, we are in a crisis. The government says we are doing great guns. And I think that's a fundamental problem. Once you say you're doing great guns, then you don't do anything at all, and which you're not doing anything at all. You say we are in a crisis, cut down the indirect taxes, let people start to get more money, let people get the confidence, and that's what to very clearly, we got to get away from FDI-driven whole policy of this country. The entire government machinery, the minister, the prime minister think the only way out for this country is FDI. They've forgotten the Indian industry, they've forgotten, and I'll tell you a small example. You ran an interview of Nirmala Sitharaman the day yuan got devalued. She said we will come up with a package for the exporters immediately. It's been now 2 months plus. There is no sign of the package. So if you're not going to address the Indian industry, Indian economy, Indian customer, then keep waiting for someone from outside this world to come to country to bail you out. I think that's the fundamental flaw they need to address. If they address it, I think we will have a quality revival because things are okay on the macro front. But if they don't address it, we are going deeper and deeper in a morass. Industry is losing its charm. Industry is losing energy. People are feeling demoralized. And coming back to the press, I didn't mean to say anything bad about the press. I just said there are, not enough caveats out there in the market. People saying, oh, bull market, every correction, buy it.
Okay, since you want to make it up to us, Ajay, since you want to make it up to us, brighten our Diwali and give us a couple of stock ideas for our investors. I heard you mention that there are some stocks in this market like Maruti which will still be sort of, resilient to the pain. What are the other names that you're looking at?
Sorry, can you repeat the question, Sonia? I just got a little muddled up the question.
Okay, I was saying that since you want to make it up to us for your comment earlier on, why don't you brighten up our Diwali and give our viewers a couple of stocks this Muhurat trading session that they can buy?
Well, I don't know whether I'm qualified to say a stock specific given the SEBI regulations. But if I would venture to kind of step out and kind of make a recommendation of it all, and in every stock I have a stake. So let's assume that I have interest in everything. Okay, either plus or minus. Okay, as I said that today, if you look at my portfolio, I am a net negative position in the market. I'm running a short position, Sonia. Okay. So I am the last person to start recommending stocks today in the market today, by and large. But having said that, if you really want to be, as I said, the liquor twins are a safe place to be. MNCs are a safe place to be, and even at this point of time, including FMCG companies of MNCs, safe place to be. I think we are reaching a point in pharma where if you've not got a portfolio, you can start entering pharma again. It's cut down quite a bit, and this could be the best time to do it. Not a buyer of infrastructure stocks at all.
All right, Ajay, thanks a lot for your views and your feedback always. Happy Diwali to you once again. Liquor stocks, well.